Thank you. It's great to be with you guys. I didn't know this was the very first Fireside Chat, so you guys are in for a real treat, not only because it's the first, you get to hear that, but at the same time, it's my pleasure and honor to be able to interview Dr. Lee Mosbacker here for this. Not only is Cyrannus the presenting sponsor here this week, but Cyrannus is also itself a new technology startup, as Lee introduced earlier today. A very exciting startup that itself is actually breaking new ground in terms of how to redefine the venture capital investment space, as well as take advantage of and be a leader in helping other funds and family offices and other accredited investors actually participate in that in areas and ways they haven't been able to date. So, Lee, it's great to have you.
Thanks.
Yep. I thought, since you introduced yourself a little bit this morning, it might give you a chance for, in case any of the folks here didn't get to hear your opening remarks, if you'd give them a little bit of background about yourself.
Sure. So I'm a physicist by training, got my PhD at Ohio State. I've been in venture capital on one side or the other for 25 years. Have two venture funds, Cobalt Fund, which we launched in 2021. Like I mentioned before, we have a sports betting fund that we rolled proceeds over to launch Cobalt Fund 1. We funded 10 companies. Average check size was $250K. I don't take LP money. It was all our money. And then we launched Cobalt Fund 2, and then the state of Ohio was nice enough to give us $5 million to match with our $5 million commitment, and Michael and I run that fund together as the Ohio Gateway Tech Fund. I have a sports betting hedge fund that's offshore, and we're launching another sports credit and lending fund. So deeply on the quantitative side. Specifically, I'm really interested in predictive markets, how collective wisdom drives those predictions, probability around those predictions, and the pricing and opportunities in those predictions.
Great. So could you tell us what you do in your spare time?
Yeah, well, luckily it's, we're enabled a lot by AI. I don't think I've changed my system for either of these in 4 years. We spend a lot on proprietary data. Spent the first 2 years from 2015 to 2017 really getting that data, optimizing it, and building an intelligent system around it. We were doing AI in the Bay Area before AI was cool. But I made a joke earlier about the Bay Area funding, but the Bay Area is wonderful. We were ahead of the curve and got lucky. Met a guy at a craps table and launched it from there.
Yeah. Very, very good. You have a common saying that Cyrannus is like Y Combinator meets Robinhood. And I thought as an icebreaker, you could explain what you mean by that. Not necessarily in too much depth, but just at a high level. I think everybody's very familiar with Y Combinator and Robinhood. How is Cyrannus like the best of both?
Well, I say it's Y Combinator meets Robinhood because even though venture capitalists are supposedly investing in the next generation of disruption, they have a hard time often seeing the disruption itself, especially in their own industry. So what I mean by Y Combinator is Robinhood is more of a descriptor to say, oh, I get what you're doing. The Y Combinator side just simply means that we're bringing the best people in the world to look at an opportunity to give coaching and feedback to founders immediately at scale. Now, we take it a step further because we built an intelligent system on it that supplies information to our experts in a way that's rapid and targeted. So it allows us to scale up. But I think that to do anything right in any type of market, and specifically in venture capital, what we really need here is we need some type of market signaling. So early, we provide that market signaling for our interesting cross-section of experts. And those experts could be from industry, they could be Kaggle grandmasters, they could be graduate students, they could be professors at universities. But we also couple those with analysts from secondary market providers like Morgan Stanley, Hive, and a few others to add that pricing signaling in. So we're really trying to get to get a distribution of what's real. How's the market pulling this product into the market, and then that also allows us to later, when we want to think about what these things are valued at, because we really want the liquidity side, the Robinhood side, to play a major role in our signaling around the value of these startups, is how do we price it? Right now it's a bid-ask marketplace. The idea is that, like Robinhood, you can follow a startup, you can take a deep dive into the startup. You've maybe followed it for 1 or 2 years, and maybe you want to get into a position that someone else is looking to apply one of our advanced fund strategies to, and you can swap positions at a price. And I think that that's going to open up investment really to millions of people. 20% of households are accredited investors. We're focused primarily at the pre-seed and seed stage. We're looking to kind of blow this up in the Midwest and get people excited about venture. And I think that having a safe harbor of scoring, a transparency there, coupled with the ability to apply traditional finance techniques to the liquidity option in our marketplace is going to really expand the venture reach in the community.
Awesome, awesome. I want to unpack that a little bit, if you don't mind. That was awesome, and I think a nice place to start with a lot of key aspects. When we're talking about alternative investment strategies, you already highlighted the role that AI is playing. It's played that in your career, your venture career, maybe even academic career yourself. So with respect to how Cyrannus is leveraging AI, you've had a history of AI and different types of applications. How is Cyrannus's in enablement of AI on an online platform based on video primarily for founders submitting investable ideas, and then experts reviewing those and investors then deciding, do we follow on or not? Do we want to be part of that deal? How is AI playing a role? Given it's had such a substantial role in your other ventures, how is it specifically playing a role for Cyrannus?
So as a general comment and where I see AI making the largest impacts in the next 5 years, I don't think it's so much about advanced super intelligent reasoning as it is about making things more efficient and harnessing the intelligence of groups and individuals. And so AI plays a couple roles for Cyrannus. Role number one is basically making it easier, distilling information, providing that information to target the right experts and the right individuals to evaluate an opportunity. But then with the market signaling, we also are constantly monitoring that intelligence knowledge graph of data that's being created, and then assigning values to the best of the best, and maybe people that don't know they're good at something, but are, and maybe people that think they're good at something and maybe aren't. We kind of clean up that knowledge graph information, and that enhances the collective wisdom.
Awesome. And you said even this morning about the 4 circles of Cyrannus. I know you emphasized that. I've heard you share that before. And that one of those 4 circles is founders. Given that this is a venture fest, we probably have a lot of founders in the room. Could you share a little bit about how that AI model and the data and predictive data generated from that model is actually beneficial to founders who would want to come onto the platform?
Well, the first thing is just the scorecard, the scoring in itself. And so we offer a couple carrots for founders to come on the platform. First off, the platform's free for founders. We're not taking fees from founders. They can submit an idea. It's very video-based. That alone is an interesting filter. And knowing that you're going to put something in front of experts, and our experts are all under NDA, so they're not going to be sharing any information. You control your information. But you can get this back and forth, leveraging sort of this anonymous screen between people that really have a wealth of knowledge into the industries that you're going in, and getting that feedback, and then you can resubmit as many times as you want to get the score to a point where you're ready to then publish under your own conditions to our platform. And if you score in the top 5%, we have $100 million of partner funds behind us. We're just going to fund the top 5%, and we hope to do that in 2 to 4 weeks. I think we made our goal this week. And then it will also allow you the ability to publish to the top 20% of scores can be published to our active angel network to syndicate that investment, even if you're not in the top 5%. But we hope that you're resubmitting, refining your idea, getting feedback, and then we hope that we can enable the top 5% to really close their rounds quickly.
So then the efficiency for founders is really actually getting the expert feedback, curated through the AI system, expert feedback that identifies the very specific indicators that are limiting their investment readiness, which would have otherwise given them a high score, which would have otherwise qualified them for Cyrannus funding. which would have qualified them for additional funding if Cyrannus wants to syndicate and they're open to it, syndicate on the platform. If that's the key, then why video?
So we talked about the sports betting. I got to be honest. Both me and my partner, Michael Samperna, are poker players, and Michael's a professional poker player. There's a lot of information to be gleaned from video. And I'm about real businesses. I'm about founders that believe in what they're saying. And the video makes it easy for experts to digest quickly, to get a really good feel of the opportunity, the commitment, the passion of the founder. Mm-hmm. And it's also a filter because a lot of people with warm intros really want to control the narrative. And I think it takes a lot of venture capital out of the system for bad deals. Mm-hmm. And I think that if you're a good, dedicated, honest founder and just believe in what you do, getting on video and talking about that, we can get a lot of information from that.
I was wondering if you could just elaborate slightly on the type of feedback, again, assuming there's some founders here, the types of feedback, the areas of focus that these experts are responding to. And I want to be careful here because I don't want to confuse with the question that Cyrannus is actually conducting a detailed due diligence dive. There's another question I have in just a moment that will indicate why that's relevant. But you're touching on something that I think I want to make sure just comes across and really clear to everybody about the dynamic aspect of having these experts evaluate these videos against a protocol or against a rubric that but not only do they have the expertise, but they also know what's expected for Cyrannus to be able to make a determination as to whether this is investable or not. So in that moment, what types of information are the founders getting? If their score is low, what types of feedback would you anticipate they'd be getting that would be beneficial?
So Cyrannus is a two-step process. The first step is you upload a video elevator pitch. We just want to know that you can sell and compel, and you're going to get some feedback on that, and you can resubmit as many times as you want. Once you pass, and I think we screen top 25% go through from the elevator pitch. Once you go past the elevator pitch, we go into what's called due diligence or analysis, where we break it up into like 5 different areas. So, and you know this better than I do because you taught it for 30 years. But what's your competition? What's your go-to-market strategy? What's proof of traction or product market fit? Really focus a lot on team because we're so early. That's really the areas that we're looking for. Probably a little bit on technology and product itself. But typically, we're focused mainly on the pre-seed stage. We do some seed deals. Pre-seed specifically allows us to kind of just, write the check. We're not looking to drag this out for 3 months or 4 months. Our returns are motivated by 2 things. One, the enhanced economics you get from rebalancing around VC hype cycles and compounding those liquidity multiples over a 10-year cycle, but also just kind of following we can't change the probability distribution of what is real. Just like you can't change the distribution of what's going to happen in 1,000 sporting events, you can't change what's going to happen in the industry. So we're just going to write a lot of checks. We're going to write a lot of checks. We're hoping to do 1,200 checks in the next 3 years. And that power law distribution, coupled with the video filter and the advanced economics and the expert analysis, really enable us to elevate the returns on a typical investment.
Great. I think you can see, if you're following, you can see how quickly you move from the platform, the Cyrannus platform for how you upload video and get feedback, to the actual investment model that's both investment on the platform as well as the syndication with other follow-on investors and funds that are either themselves putting deals on the platform or participating in those deals, the deals that we're syndicating. But at the end of the day, you're now transitioning into the business of Cyrannus. I just wanted to call that out, just as a recognition. how Cyrannus is actually making money in the process is its investment of its own funds, as well as the syndication of funds too. So it's super helpful to describe that. One of the other alternative strategies that venture is adopting, and has been using it for a long time, but now putting much more emphasis on it, is this notion of partnering with other funds. Could you share a little bit about the types of funds you anticipate to be on the platform? Well, start with the ones that are already aligned with the fund. What kinds of funds are going to be there, and how are they typical venture funds, or is this a new pool of money beyond the syndication side, but the new assets under influence that you're managing?
So I look at it as two different types of family offices or funds that we're working with. Traditional venture funds are in a really bad position right now, given the climate. I think that LPs, limited partners, and family offices are getting exceedingly impatient with the long time horizons. They're also not excited about the fees, and so what you're seeing is the emergence of, also on the traditional venture side, what you're seeing is the emergence of family offices that are really interested in how do we reduce those fees, how do we allow our fund partners to take a stake with us, so to have some skin in the game. So that's one thing. And then there's a whole group of family offices and high net worth individuals that normally would not be in venture capital because it doesn't have that liquidity option, it doesn't have that transparency, that are now thinking about how do I get into venture because we offer this product.
Could you explain a little bit about how you're incentivizing alternative investors and the experts in particular with the swaps option, the equity swaps option that Cyrannus is offering?
Sure, and just to give a little bit of background on sort of how traditional venture capitalists work, what's the difference between a 1% fund and the rest? So top 1% fund, the really only difference is that they've hit a decacorn or a few unicorns, and then they've moved up into the 1% side. And so you're really kind of gambling there when you're deploying money, and so your plan is just to deploy a bunch of money across VC funds. Hopefully one of them hits a 10,000x, and it can cover all the sins that were made before. I think that that alone is losing some appeal. But with the private market swaps, what you can do is you can start utilizing other areas of finance into your fund strategy, your fund investment strategy. And I often call VCs sort of the troglodytes of finance because they don't have these abilities that people have been doing for a while. Number one is that a VC hype cycle is going to last 3 to 4 years. And so, and us in the Midwest, we're often going to be following probably later than what's being invested in the Bay Area. And so we're always seem to be at the back end of the hype cycle. And these firms are motivated to pump the valuations of later stage deals so that they can get more money for themselves to manage and then get those 2% fees. So what we do is we allow, with the liquidity, you can really rebalance your portfolio, which is a key aspect of other areas of finance, is portfolio rebalancing to get ahead of the hype cycle at when valuations are their highest. And then what you can do is you can take that money like an evergreen, and you can keep compounding it over. If you want a 10-year cycle, you can keep compounding those liquidity multiples. And what it does is that it allows you to just be average in your portfolio performance and generate 1% returns because you're able to do those 2 times. You're the rebalancing plus that compounding multiple year over year allows you to get those returns.
Yeah. And do the experts on the platform participate in that as well, or is that just available to the follow-on investors?
So for a marketplace to work, you have to have skin in the game. And we reward, so we're usually first money in. We try to close a founder round in a month or so. We get a chunk of equity because, like Y Combinator, we're providing that service. We take at least half of that, and we give it back to the experts. So if you're an expert in biomedical devices, you're active on the app, we want you to be able to make a living by doing this, and then so you get credits that then you can choose to invest in the startups that you want. And that's not like an equity, like an advisor equity in a traditional venture idea. It's locked up for 10 to 15 years. This is pretty liquid equity that you can put on the platform, and we want to enable people to make a living doing the things that they're passionate about, helping us shape the future of technology, and leveraging their expertise. I'm a firm believer that the people that can raise the most money for funds aren't the same people that know what's going on in industry and technology.
That's been one of the cornerstones of what you're addressing with the way the Cyrannus model's built. So, it's got to be overwhelming to build such a massive expert network, because this isn't just experts signing on like LinkedIn. These experts are active, they're screened, they're qualified, they're recruited, and then they're brought on. When I hear you say that diversification is one of these key strategies that allow you to cross multiple disciplines, across many technology verticals, I want to ask, how do you build such an expert network? But it's more the question about what verticals are you focusing on? And within that, how are you building those networks succinctly to justify that you've got a really quality expert panel that's reviewing these deals?
Yeah, so like in other predictive markets, the key is numbers. We have to have a lot of people looking at a deal, even if it's just 2 to 3 minutes. It's challenging to build a market. It's challenging to build the expert network. We're having growing pains right now. We launched a month ago, but we're recruiting through a Wikipedia model. Wikipedia runs the entire English language on 20 individuals that are called super editors. And the information embedded in Wikipedia is amazing. So the model is that we recruit super editors that then refer editors, that then refer curators, and that grows with a power law. And then we kind of prune the network as we start doing deals and start getting signaling to kind of enhance the quality. And then we give enhanced economics to the super editors. We give enhanced economics to the editors for the activity that they're doing on the platform.
Awesome. That leads to that next question regarding your launch. The launch just 3-4 weeks ago. How's it going? What do you see the positive signs? Where are the areas you're still working on? You mentioned just now building that expert community is taking time and will and should, but at the same time, where do you see what's been the lessons learned over the last 4-ish weeks?
Well, it's nice to have some founder struggles again. Definitely we've got a great dev team, and Big Kitty Labs is our partner, and they're doing great. So appreciate Big Kitty. We've got bugs. We've had some founder struggles just, the last couple weeks. I've given everybody my cell number. Reach out. We'll fix it. So just on the product side, there's been some issues. On the network, it's a little, how do we increase engagement? And I think it's, probably in the beginning, we're probably just going to have to start giving them revenue, start paying for their time, and especially on the super editor side. And so we've posted a bunch of job postings across a few verticals, which is AI, climate, fintech, cybersecurity, and I'm definitely forgetting one. But that's been really useful.